Hi friends, welcome back. So Elon Musk and Tesla stock are among the most interesting and important indicators to watch in the market these days. I'm going to go over why in this video. We'll talk about investing, talk about Wall Street, and also talk about the economy and what's going on around the world. So let's just jump right in. Take a look at this chart here. This is the daily movement of stocks. You got Tesla up 4%, so had a good day. Nvidia was up, Google and Apple were a bit flat, Microsoft was up, Oracle was up, but then you had energy and the banks down. I'm starting with Tesla stock today, guys, because why is it moving up the last couple of days? Well, they had this interesting news, and let's read the headline together. It says, Tesla stock deserves a unique valuation according to the newest bull. So valuation, how do you value a company? What is something worth? And they're arguing that Tesla is a unique stock, a special stock. And this, again, will help you understand the markets, Wall Street, and what the heck is going on. So let's read it together. I think bulls and bears will find this interesting. So this is coming from Deutsche Bank. This analyst says, and I'll read it for you, says Tesla Inc. is far more than a car company, okay? So that's the argument you often hear from the bulls. Tesla is far more than a car company. And that has Deutsche Bank, Edison U thinking differently about how to value the stock, right? If it's a special stock, a unique stock, you got to value it differently. Here's a quote. At the core, we do not see Tesla as an automaker, but rather a technology platform attempting to reshape multiple industries, deserving of a unique type of valuation framework. So he's saying, if you want to figure out a fair price for Tesla stock, if you want to value it well, you have to understand what kind of company it is. And he's making the case that this is a really, really special thing. What does he say? It's a technology platform attempting to reshape multiple industries, right? So it's not just a car company, multiple industries, what they say, and it's going to be a unique valuation, right? So you have to value this company in a special way from other companies, according to Edison Yu over at Deutsche Bank. He also says here, he initiated coverage of Tesla shares with a buy rating, so he wants you to buy it. That's over at Wall Street, and is saying, hey, it's going to go to $295, okay. Advising that investors look past, quote, temporary softness and delivery in margin trends. So forget about the numbers today. It's just temporary, right? Forget about, delivering cars, forget about the margins. Maybe you're not making so much profit on said cars. Don't worry, it's only temporary. So that's what he says. Look to a brighter future. Let's keep reading through the stuff, and I'd love to hear thoughts from bulls and bears as we go through the stuff. It says here, for energy storage, he borrows from Enphase Energy, right? 25x multiple of enterprise value to earnings before, that's EBITDA, before interest, tax, depreciation, and amortization. So he's basically saying, hey, we're looking at Enphase Energy, and I think that's the solar power company, and we're going to say, oh, Tesla's going to be, valued like them. And so basically what you're saying, and this is something you do often in the market, is how do you value a company? Well, you look at how is it compared to other companies. Sometimes, though, in a bubble, that's what people say. They say, well, yes, we're all in a bubble, but look at all the other stocks in the bubble, so therefore we're valued equivalent to them. Why do you say that? Like, why do we compare bubble stocks to each other? Because if you compare, say, the way you would normally value a company today to say how you would value it 20 years ago, it would make all the companies today seem overvalued, right? And if you're Wall Street, you want to keep people invested in the market. You don't want to say, hey, everything's overvalued. You want to say, hey, it's all relative to what's happening today. So it's not wrong per se. If we're all in a bubble and the bubble keeps going up, then hey, you can do absolutely fantastic. But I do want you to understand the language of this stuff and sort of how they're talking. They're saying, we're rating it this way because look at this solar power company, Enphase, and we're going to rate it like that. Also says here, quote, the energy storage business is already undergoing a major growth margin inflection, which could result in a upwards of $13 billion in 2025 revenue, according to you. So you're going to make a whole bunch of more money in 2025, talking about energy. Also says here, and this is one of the more interesting things that he says here, in terms of Tesla's humanoid robot ambitions, again, coming from Deutsche Bank, he assumes the company has 200,000 robots at $50,000 average selling price by 2035. Then he applies a multiple similar to NVIDIA, right? So you're saying, okay, look at NVIDIA, guys. Look how awesome NVIDIA is. Look at the multiple. Look at how we sort of value NVIDIA because it's a special company. We're going to value Tesla like NVIDIA, like Enphase, for this portion of the Tesla's business, given the focus on artificial intelligence. And guys, as we read through this stuff, I want you to put your thinking caps on and to ask yourself, okay, does that sound realistic? I guess we're talking about selling 200,000 robots a year at $50,000 a pop by 2030. It's a simple question. Do you think we're going to sell We being Tesla, if you're a shareholder, saying you're going to sell these things for $50,000. That's how we're rating the price of the stock, right? You're making these assumptions. Also, here's a quote. Our framework, we see humanoid robots as a critical part of long-term solution to address two major structural issues: labor mismatch and shortage and inflation in the US, Europe, and unfavorable demographic trends in Asia, mainly Japan and China. So, you need humanoid robots because we don't have enough people in all of these places. And I guess all these companies are going to hire robots to, make up for the loss of people that we don't have, right? I guess I'll just dispute it now. I can dispute everything later, but I'll just do it now. We're talking about the main problem with this stuff is that in order to make a robot attractive, you need to have the robot cheaper than the human. Today, the value proposition is not great. And I've talked about this several times on the channel. Guys, I live here in Korea, but I've also lived in China and Japan, and I've also lived in Vietnam. So I've seen a lot of Asia. I've lived in USA as well. And I can just tell you, so if you go to, and I mentioned Vietnam here, if you go to a place like Vietnam, you can hire a factory worker for a year, anywhere from say like a 3,000 on the lower end to maybe 6,000 on the higher end for a whole year. So you're telling me that I'm going to be selling $50,000 robots, and I'm telling you, like, how does that make sense? I can get a human for say 6,000 and say, like, for example, like in Vietnam. That's just reality. We have a lot of our factories in other countries. How much can you get, say, for example, a factory worker in USA? Maybe these days you can hire a factory, and it depends on the industry. Guys, it depends on the industry. So if you're a longshoreman, that kind of stuff, that's actually a higher paid job. It's not necessarily a factory, but it is a labor job. And maybe those people might make maybe 100,000, 150, something like that. Maybe an auto factory. And you guys can let me know. I don't know, maybe they make 85s. You can tell me, guys, what they make. It's going to be something like that. They actually make a pretty decent salary. But maybe, part-time factory, because Tesla, they're non-union, they make a lot less, etc. Maybe they do make 50 or whatever. But I'm thinking that from this point of view of Deutsche Bank, they're just like, oh, 50,000 is really cheap because look how much we pay, people in USA. But I'm just like, well, if you think about the global economy and how much you can pay a factory worker, and I use the example of Vietnam, India could be more or less than that. I don't think it's going to be that much different than Vietnam. I know China, the cost of workers is going up, but still, you're not paying factory workers. I promise you, you're not paying factory workers in China or India or even Vietnam or Thailand or Indonesia. You're not paying them $50,000 a year. You're totally not doing that. And so this is where, like, I just, and also too, guys, I live in Korea. I can just tell you, we get a lot of workers. Actually, they come from China, Philippines, and Vietnam, and it's actually really interesting. Many of the construction of buildings around, there'll be signs up of, just for the workers or various things. And actually, many of the signs are now in Chinese and Vietnamese. So again, I'm in here in Korea, and it's true that we don't have as many young people, but we get immigration from other Asian countries. It's a really fascinating phenomenon. You could talk about, the situation in USA, for example, for say agricultural workers or, kind of workers or gardeners or whatever. The question I would pose to you is, do you think it's going to be cheaper to hire a robot, buy a Tesla robot, or hire someone from south of the border? And that's something a lot of people do. It's just the reality of how our global economy works. So this is a big issue I have with the whole robot thing is, can you make it cheaper than a human? And it's simple as that. Moreover, here we go. Then there's the robotaxi business. So he's saying robotaxi are going to make a ton of money. For that, used model assumes a fleet of 1 million vehicles by 2035. So he's saying we're all going to get robotaxis, I guess, as well as additional revenue from licensing to car makers that gets NVIDIA-like multiples as well. So again, if you're talking about a bubble stock compared to other bubble companies, and then suddenly it seems like normal, but not necessarily. If you, I understand Tesla's a unique company. I read it to you as well. But let's keep going through this. It says here the lion's shares of used 295 price target. 195 comes from automotive, so that's still going to be the bulk of their revenues, I guess. 53 value to energy, right? How you get into the 295. You also then have $22 a share to humanoid robots, and then $24 a share to the robotaxi business. So actually going to be a small portion, he says, and then $1 to share to other stuff. So that's sort of how we're coming up with these price targets. This is the stuff I ask you guys, these simple questions. Does this sound plausible? And this is as an investor, because I said, get investing. Read this stuff for yourself, and I go with you on the channel. Does this sound like something that makes sense to you to put your money in? Do you believe Tesla's going to sell $50,000 robots. Or for example here, plus there's a potential for introductions. Our read is that there will be a new entry-level car, right? The Model 2 or hatchback. And by not relying entirely on a new platform, Tesla can bring such a car to market quickly. Well, they haven't done it yet, but that's the bet. And so for any company that you invest in, you want to know like kind of what is their upside? Do their upside plans seem realistic? And then you also compare it to the financials. So in terms of like their financials and stuff like that, I'll just tell you Tesla's overvalued. But when you compare it to Enphase or Nvidia, I mean, we're all in a bubble, so why not? And that's the argument that they're making. They're not comparing Tesla to just for example, to the multiples of like an oil company, which is an energy company, or they're not comparing Tesla to the multiples of say like, you know, a traditional car company. And you know, regarding the, you know, Tesla building a Model 2 hatchback cheaper car, guys, watch my other videos on this. We looked at some of the cars here in Korea, be it Kia, Hyundai, the Genesis. The Genesis is a nice car. We haven't done an exclusive review on that, but I did drive a Genesis in one of the videos. We went to the car show. BMW we talked about as well. I've talked about Polestar on this channel. There are other cars out there in the world. But check out our video. We just did a review on the Hyundai Inster, or also known as the Casper here in Korea, but check that out. And guys, I want to point this stuff out as well. So, you know, why am I bringing up like other things? Because sometimes when you watch, you know, Tesla only channels, literally they just tell you that Tesla's awesome and everything's going to the moon, and they completely ignore the world economy, which doesn't make a lot of sense if you want to get good at the market. And I'll kind of explain why. So first is, okay, in order for this world to work in terms of the U.S. modernity or you know, whatever modern country you're in, often it's based on people borrowing money. You borrow money to buy a car, you borrow money to buy a house, etc. And in order to encourage banks to, you know, essentially lend out money, right, or make our system work, as banks, you know, need to profit off said things. One of the things that the Fed was trying to do was like raise the amount of money a bank essentially had to hold in reserve. Basically, can't lend out all your money at all the time, because there could be a scenario, for example, where a bank has zero money. You know, they take your money and they immediately lend it to someone else, and they're making profit on your money. But I'm sure you guys get the problem with this, is that what happens is, for example, if a bank has no money, they're not holding any money at all. Every time they get your money, they just lend it to someone else and try to profit on that. Then, you know, what if someone doesn't pay back their loans, or what someone wants to come in and get a withdrawal, and there's not enough money there, et cetera, right? So essentially, this is why you set these standards in place, because you want to make sure banks are solvent, to be really frank. But the banks actually lobbied really, really hard. The Fed wanted a like stronger amount of money to hold in the bank. They ended up getting weaker amounts. So the banks won this battle, but the banks are actually crashing today. So the capital requirements that the banks have is actually going to be going up, but not as high as the Fed would have wanted. So it's like half the amount the Fed wanted. I'm bringing this stuff up because, again, remember, our whole system works on people borrowing money. If you can't borrow money to buy your Tesla, then, you know, you're not getting it. No Tesla. No Tesla's coming to you. We had a big scare today. This is sort of why the banks are tanking. A couple things. So it was like Goldman was saying, our trading is going to be down, so we're going to make money less that way. Ally Bank came out with this report that basically saying consumers aren't paying back their loans, and Ally's a big in auto loan part. So again, this is why you want to tie all this stuff together, and I'll read it to you guys what Ally Bank has to say. It says Ally's CFO, so the chief financial officer, on Tuesday outlined various macroeconomic issues affecting the bank's customers. Right, you understand who's buying said Teslas if you're investing in that company. Quote, over the course of the quarter, our credit challenges have intensified, right? CFO Hutchinson is saying in a Barclays conference call, quote, our borrower is struggling with high inflation and the cost of living now. More recently, a weakening employment picture. So I don't mean to laugh at like people, you know, struggling. I don't mean that. I'm just saying like this stuff is so obvious to me when I read it. And then you have like all these, you know, Tesla bulls like, oh yeah, we're all going to buy $50,000 robots and we're all buying cars and everyone's going to keep shopping. And it's like, well, the bank is like, well, I mean, guys, you know, people can't pay back their loans. People are defaulting on the loans. People are losing their jobs, right? Struggling with cost of living and inflation. And so this is why you track all of these things. Also says here, today's update, this is from the one analyst, today's update implies likely pressure on Ally earnings expectations and return profile in future profit. So future period. So basically, like, the Wall Street's looking at, okay, is this bank stock worth anything at all? Are they going to make any money in the future? Are people going to default too much and banks going to lose money? And also too, you're looking at the consumer. So you're looking at two different things. So it's interesting though, because one, if you just want to, take a small view, you say, okay, I'm not buying Ally Bank. Their customers are really, really struggling. Forget that. But if you take a larger picture, you're like, okay, how much of Ally's Bank customer base represents, say, a larger customer base or consumer, better way to say it, consumer base in the USA, and will everyone be struggling, right? Not paying their bills, struggling with the cost of living, struggling with inflation. You always track this kind of stuff, and then how does that translate to, say, car sales for Tesla? The other issue as well, which is interesting, is Warren Buffett's actually been selling stock. He dumped a bunch of a Bank of America stock. He's been doing it the last couple of months. He dumped a bunch of Apple stock, guys. And so I promise you, Warren Buffett is well connected. I'm sure he gets lots of information around the market. I'm sure he does. I wouldn't be shocked if he kind of knew what was or what was not coming down the pipeline at, say, Apple. They just had their announcement, and Apple's sort of announcement was kind of ho-hum. You guys know this. So he's sitting on a whole bunch of cash these days. That's Warren Buffett. Or you take a look at this. Oil prices are going down. I think we're worried about demand, right? So these kind of things happen when people just don't have enough money, we're not traveling so much, et cetera, or factories are shutting down, not shipping so many goods. Like, all this stuff will help you understand what's going on. Now, I know that some people, they just like, well, Chris, just tell me the price of Tesla stock. That's all I need to know. Well, I'm trying to give you a full picture of everything, because if you're just going to listen to pumper channels or listen to Deutsche Bank that tells you, guys, Tesla's going to be 295, and you don't read anything into it, you say, oh, well, they said 295. And that's the average person out there. I'll just be honest with you. That's the average person on YouTube out there. They just want to know what's your price target, and that's it. And that's how why people lose money, because they totally get burned. When I read through the stuff myself, and I'm like, okay, you're basing that price on selling $50,000 robots. You're basing that price on, like, okay, you're going to compare it to NVIDIA or Enphase, other bubble stocks. It's like, come on, this is ludicrous. Can the party keep going? Sure, it can, but how long? And what I mean by party, guys, is if you haven't, oops, I got a small poster, but I'll blow it up. If you haven't seen the movie Marg Call, please do. I know it's pixelated there, but trust me, it's not an animated movie. It's a live action, but it kind of gives you an inside look of what happened during the Great Financial Crisis, and basically how Wall Street lies to their friends and lies to each other. Just watch it if you haven't seen this kind of stuff before. For the younger kids, this might be more. I won't say more. Just it'll help you understand, because this is crypto world, and they talk like kids. and you also see that, like, this is a real company, this is a documentary. You also see that, like, oftentimes the people holding the strings of the world are also kids. Like they're all doing substances and having parties all the time, and kind of when you see what's behind closed doors, you'll realize, pretty frank, that the emperor has no clothes. And that's why I always use the example of Elon Musk. I mention this all the time, and I understand. To people who don't understand, it makes no sense why I would mention it, but I do. I'm about the same age as Elon Musk. We went to the same school. I kind of know how these things work and how these people behave behind closed doors. So nothing shocks me, right? For some people, when they see this Elon Musk, what's he look like when he has no clothes? It's really shocking to them, right? Oh my God, is that really the billionaire, the guy who's Mr. Twitterfingers doing all this stuff all the time? Guys, these people are human. And in fact, they can have obsessions, they can have addictions, they can be flawed as any other human. Just because they have money doesn't mean they're particularly smarter. Oftentimes it means they're born rich. Also, sometimes that they're willing to do things that you and I may not be willing to. So, I'll let you interpret how that, however you want that to be. But everyone has certain things that they're willing to do in life for money. And Mr. Musk doesn't really have much limits in that way, what you're willing to do or what you're willing to say. The other thing that I want to mention too, this is the robot. He's willing to try to convince you that they're going to sell these things for 50 grand a pop. Good luck with that. But some people, they might believe that stuff. I'm not buying it myself, not literally buying the robot, nor buying that kind of thing. The other thing that I want to mention is, if you haven't seen this movie, American Factory, check it out. It's kind of about the lives of factory workers and why jobs move around, etc. And you'll see it for yourself. Oftentimes, for many Americans, and they tend to be Trump voters, I'm just being honest with you guys, they say, oh, these all those evil Chinese people are all taking my jobs. That's kind of how they talk, that kind of stuff, or evil, people from the south of the border or whatever. But when you watch this kind of movie, and this is what it is, it's about an American company being bought by a Chinese company, and essentially kind of what happens with that. And I'll just leave it out. It's a really, really well done movie. They actually go all kinds of locations. They talk intimately with all kinds of people, and they filmed it over, like, I think a multiple year period. I want to say 8 years, but I don't remember exactly. But they They really, really capture everything, and it helps you understand it. The thing that I think is so great about this movie as well is that it's a very real world problem that still exists today, and you'll see the problems very clearly in the movie. And if you've never been exposed to other countries, this will help you understand it. And it's not a simple fix, because you're going to see the difference between working styles, et cetera, between China, US, and it's not really showing good or bad. It's just showing different. Sometimes people are different. Doesn't necessarily mean good or bad, just different. And how can you solve said problems? The other issue as well is that, and I try to give you a full view of the market. You go to other countries and you're doing things internationally. You may face different rules than, say, in USA, right? So, for example, and it's funny because the American factory kind of goes over that, like the culture difference between China and USA. But here's one more of a legal difference. So Apple and Google, they're being ruled like basically monopolies in Apple has to pay like a huge fine. It's like 13 billion. Google's like 2.5 billion. And so these kind of things are going to be pressuring the tech industry. We're also looking at possibly breaking up Google. I mentioned this before on the channel that this will get started, going time forward. But the thing is like, when I look at all the stuff in the market, right, and I see that our banks are having problems, I see that, and I haven't even mentioned that China's slowed down yet, and it's like, okay, so why are we all buying tech? Yeah, so China's slowing down also. They're selling off a bunch of their stocks. And there's a couple things that I think is going on. I think one is we have a lot of, how can I say, moving around of assets across borders, right? We saw that in the Japan carry trade, when it turned out there was like all these Japanese people that were buying yen really cheap. And then essentially they were using those loans to buy assets overseas. And then when the interest rates changed, suddenly it ruined everybody's math. Also, you can make the case perhaps Chinese people are selling all their stuff and then throwing their money into our markets. And like, oh, I'm just going to buy NVIDIA. It's kind of crazy though, because I think a lot of this stuff in our world is all based on borrowed money. And we keep seeing these pockets of like people not paying back said money. And so eventually you just feel like sometimes you're going to pay the Pied Piper. When exactly pops, or do we just keep printing money forever? That part's harder to predict, other than you got to look out for yourself. And I always say that so much on this channel. I know, so like, guys, trust me, I really know. I try my best to help, and I know when you turn to other YouTube channels, they basically try to make it oversimplify it, and then they say, buy my $500 class. and then they basically sell you a bunch of snake oil, how to say it. My advice is always the same on this kind of stuff though, and I think it's good advice, right? First, focus on make sure you have a job. In this day and age, you don't know. When you have like CEOs out there, bosses like Elon Musk, they'll fire you on a whim. That's real. So people worship this guy, but I'm just telling you, he's not in it for you. He's in it for himself. So be careful out there. Make sure you're secure at your job. Make sure you got job skills that are always useful. Make sure you have friends, that you have somewhere to go. So I mentioned that first. Pay off your debts. That's something that you want to, it's never really a bad thing to do. So do that. Also, guys, it doesn't mean when things, go south or whatever, it doesn't mean you just quit investing. It doesn't mean that at all. It just means that you allocate a little bit differently. So, for example, my personal opinion is I don't want to buy stocks at the top, right? So I'm not necessarily looking to buy a whole bunch of NVIDIA or Tesla, especially if I understand their business, which I do. So yes, I get it. If you're for Tesla stock bull, they'll say, oh, it's a special, unique company, and they're going to build robots. They're going to sell robotaxis and all that other stuff. But, this guy's 53 years old. He's not going to be at Tesla much longer, I don't think, or live that much. Well, I'll let you guys decide. So just because I know kind of how this stuff works. The other issue also is you can look at CDs, savings accounts, keep some cash reserve, this kind of stuff. Like you allocate to what makes sense for you, right? And everything's going to depend on your particular risk profile. If you don't want to stress out too much about picking individual stocks, you go with the index fund, and then you're at least going to be performing average. But you're still going to be, building up your wealth and stacking up shares, etc. You're just going to be doing it to where like you don't have to stress out about losing all your money in a particular company, because the sort of bet you have to make with yourself is like, okay, if I buy an individual stock, what if it's like 1/3 chance that I lose everything, I go to zero, or 2/3 chance that it doubles, right? For example, like you have to figure out like, okay, am I willing to take said risk? Because oftentimes on YouTube, the most popular stocks, most popular channels basically pick the ones that are like have a 1/3 chance to go to zero, and so suddenly you're just basically gambling at that point. So essentially what you always want to be doing is setting yourself up for success to make sure that you're not taking massive risks all the time. because I don't want to put my life and my savings into the whims of this particular guy. And that's what people do. That's what you're doing when you're giving your money to someone else. You're just saying, okay, I'm going to trust my money with you, and you're going to build those robots and cars and stuff, and we're all going to be rich. But I'd be very, very careful out there on this thing. So I hope you guys understand sort of why we talk about all these things together, and sort of why you pay attention to the world, what other companies are saying. So for example, BMW and VW are slowing down, but yet for whatever reason, Tesla's going to be like doing awesome. I'm not seeing it, because you still need people to buy your products at the end of the day, and you need people to have money to buy said products, right? So that's my thoughts on this stuff. I want to hear your guys' thoughts, and I'll catch you on the next video.